everyone. I am here to discuss about the introduction of bookkeeping. But first, we will tackle what is bookkeeping. So, bookkeeping is the process of recording all financial transactions made by business. Bookkeeping would also train you in posting transactions, preparing trial balance, preparing financial reports, and reviewing internal control system. So, how does bookkeeping is important? So, bookkeeping leads workplace communication. It leads small team. It also develops and practice negotiation skills. It solves problems related to work activities, and it uses mathematical concepts and techniques. Also, it uses relevant technologies, apply quality standards, perform computer operations, maintain an effective relationship with clients and customers, and lastly, it manages own performance. So most business will use a system known as the double entry bookkeeping to manage their finances. So the overall rule of thumb that covers the majority of entries in the book is that debit will increase assets or expenses, while credit will increase income or liabilities. So examples of debits are assets. So example of assets are cars, computers, stock, cash or money owned to you by customers, and then expenses. So examples of expenses are travel, materials, salaries, and bank charges. So examples of credits are liabilities. So examples of liabilities are bank overdraft, money you owe a supplier, or a loan from a bank or person. So next is income. So sales of goods, fees, charges for services, and rental income or interest earned. So in addition, to make it easier to manage, we define assets as being fixed assets and current assets. So when we say fixed assets, it is less than 1 year, and it is something we are going to hold on for a few years. While current assets, if it is more than 1 year, and it is something that changes on a regular basis. So that is the difference between fixed assets and current assets. So accounts. The example of accounts are sales, bank, cars, loans, travel, some owned to cost, supplier, and etc. We're talking about accounts. So next is accrual. So all entries are recognized in the period in which they accrue, arise, or happen, rather than when they are paid. So example of accruals are, when you record a sale in the books, when you send an invoice to the customer, rather than when the customer pays it, which may not take place for weeks or months. So these are the several additional accounting adjustments which may be needed to ensure that you are following the concepts in all reports. So first is the accrued expenses accrual. So, unsa man siya? So this would occur when you do not receive a bill from a supplier but you know that you have incurred the cost. Second is the prepared expenses prepayments. This occurs when you receive the supplier's bill today but it relates to goods or services that you will not receive until a later date or a period. The third one is the accrued income. So this account when you have sent out goods or carried out for someone but you have yet to send them as a sales invoice. So the fourth and the last one is the deferred income. So this occur when you have invoiced someone in advance of goods going out or work being done. So next is the balance sheet and the profit and loss. So balance sheet comprises of asset and liability, and profit and loss comprises of income and expense. So balance sheet, it is a snapshot of a company's assets and liabilities on the last day of the year. While the profit and loss, it is the summary of all financial performance of the company in the financial year, comparing the income and its expense with the difference between two being either profit or loss. So next is the trial balance. So what is trial balance? So one report that incorporates all the profit and loss and balance sheet accounts above. So these are the basics you need to know to help manage and understand your finances. I hope that this video has provided you with some helpful tips to get started with bookkeeping. Thank you.